So I was wrong. Yesterday we thought that ADA was going to have a bit of a break to the upside before continuing its 5-wave patterns to the downside. Fortunately, we didn't get that break to the upside and we actually started to see a move quite nicely to the downside. So let's jump down into what happened and where I think things are going to be heading next based on the current structures for Cardano's ADA. So let's kind of reflect on what I first thought was going to happen. I first thought that we were going to be moving upwards in a 3-wave pattern. So here A, B, and C coming up into and slightly above our fair value gap here. Okay, now this was because we should be targeting out a 1 to 1.23 sips typically when it comes to these structures. Here you can see that we met our minimum expectation by going higher than the double top, but we only reached the 0.05 or 0.5 at 31.8 cent level. You can see that right in here, whereas we were targeting out more towards the 32 cent level. Okay, so we know that our C wave here has stunted much shorter than expected. Again, it can happen. It's just one of those things that typically you would have expected it to go up higher. So that's kind of where that happened and why that went wrong. We saw Bitcoin pushing down and Bitcoin pulled us down. I think without Bitcoin pulling down the way that it did, I would have suspected us to move up a little bit further. That being said, where are we now? And well, we can see here we have an interesting structure coming down. We bounce up, we push down, we bounce up, we push down, and so forth. Now, the obvious one is that we have a 5-wave pattern here. Okay, so let's go ahead and just show that. Let's go ahead and just pull on our fib scale, and we can see that it has met here with our 5-wave pattern. Okay, so this is not your bounce, by the way, guys. This looks like a 5-wave structure internally. We have a structure here. It goes 1, 2, 3, 4, and then we've got to come down into a 5th. Okay, now internally, this particular structure, we need to get a better bead on it. We need to understand what's going on there. For that, we're going to come down to a 5-minute chart and we're going to reflect on what that might look like. Okay, so let's go ahead and take a look. Here we can see we have a diagonal coming in. We bounce up, we push down, we push back up again, and then we fall down into that low there. Okay, so really small wave 1, bigger wave 4, bigger wave 5. And typically, if we were to run this in, our wave 5 lands between 1.236 and 1.618, which it does. So everything there is also played out quite nicely. Here we can see, again, another move coming down. We bounce up, we push down, and we bounce up, and then we push back down again. There's actually really quite difficult to see. I think it's a really small wave 5 right in down here. We'd probably have to come into the 1-minute time frame just to kind of be able to see it. Just in here, you can kind of see we bounce up and then push back down again. A little bit difficult. So if I come back to our 5-minute chart there, we can then see and acknowledge that we have a 5-wave drop in here. That then means that we have a big wave 1 here, wave 2, 3, all of this is 4, we've got to come down. We also need to scrutinize just this little area here as well, because this is technically higher. This peak right here is higher. So we need to see whether or not this also constitutes a 5-wave bounce, and it does look like it, but I think it's going to be a little bit more of a diagonal, as in we don't have 5, 3, 5, 3, 5, but more of a 3, 3, 3, 3, 3 situation going on. And looking at it, I would say possibly expanding, because I don't think we have the 1.618 getting hit within it. So let's go ahead and take a look. You can see how that expands out just ever so slightly. That's kind of what I think is going on there. If we use the fib tool, we can see that we don't hit 1.618, and we can see that we don't do that because we're down here on that. So on that scale, so WXY is what it would look like, but it doesn't have the internal workings of that either. So diagonal is kind of what I think. That means that we are probably going to be looking at significantly further to the downside at some point in the future here for Cardano's ADA. So let's come back on over to our structure. So we know that we are correct in thinking that this here is a wave 3. Okay, we know that that's a wave 1, and this little area here is a diagonal at the very beginning. Okay, so when we complete this 5-wave movement down here, or this 5th wave movement down here, it will mean that that's actually just completing a wave 3, and would have a wave 1, 2, all of this is a wave 3, up for 4 and down to 5, that kind of situation going on, which will then tally up nicely with this 5-wave here and bring us into our 1-to-1 to the 1.236, hopefully. Let me just do some sense checks on that. But it should hopefully align quite nicely with all of those things. So let's go ahead and check. You'd see here, it would bring us down between 28.8 and 29.4. I'm going to put a yellow box area on that range just so that we have that for reference, and I'm going to delete the fibs. So that's going to be the area for that final fifth wave movement, but it's going to take a little bit of time to kind of play out. Let me go into our final fifth wave of the third wave. I know this is getting complicated, and I know people don't generally like complicated. That's why I guess trend lines are so popular. But for the most part here, we can see that this move to the downside would put us right into this little sweet spot right here between 29.6638 and 29.8861. Okay, so that's going to be the area that we're going to be looking for that fifth wave movement. Okay, so that's where that one's going to land. It's going to be a zigzag pattern overall. It is not going to be an impulsive 53535 on a larger scale. It is literally just going to be a simple A, B, and C that will take us down into this low point down here at 28 to 29 cents, and that is where we go long. Okay, so a long position is imminent in my opinion. I would probably take the higher side of this, and I would put my stop loss probably below the swing low, which would have to be down here in this particular case at 28.5, and then I will be looking for a significant move up towards equilibrium there, get a good risk reward ratio of about 2.29 approximately, and we should be pretty good. So entry on that would be on the higher side of our spectrum here, so I would be looking at around 29.4 for an entry there, and I'll be looking for TP up higher towards the 31-cent range with a stop loss being down here at 28.4. So essentially that's kind of where that would be. That's how I would trade it. Too soon to do so. I would be waiting until we actually have structured form out down here, because I do expect some volatility. For example, if we really wanted to just kind of be gambling on the market all the time, then we could of course go ahead and put in a tight stop loss here for a short bounce to the upside, probably finding resistance up here a little bit, get a risk reward ratio maybe of 1.5 to 2, a little bit of profits, a little bit of scalping could be done there as well if we wanted to, before maybe shorting the market from that slightly higher range and taking us down into the target range for the fifth wave movement, or the C wave as I will probably call it to keep things simple for the YouTube video. Okay, so that's kind of where that sits, and I know this is a complicated subject, right? When you're tracking the psychology of the buyers and the sellers, it's never going to be as easy as just drawing a trend line on a chart. Okay, now trend lines in my opinion are just, you know, wishful thinking and hopium, and a lot of people will react to them because they're simple tools to understand. Essentially though, when you're tracking the buying and the selling and the psychology of the people who are going to be reacting to price action, then I think you end up in a slightly better position. But that's just my personal thoughts and opinions on it. Now guys, if you haven't yet checked it out, membership.𝗕𝗘𝗪𝗏𝗀𝗧𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 for our members, member-only content such as videos or project reviews, airdrops, articles, courses such as Elliott Wave theory, smart money concepts, risk management, and various others, along with the data, the on-chain data that we do as well in terms of our whales buying and our retails selling, or vice versa, all the way through to group coaching sessions that we now have to offer as well. Now, this can be accessed free of charge for 7 days now on any of our monthly plans. So why not go ahead and check it out completely risk-free? Have a look at what we have to offer completely free of charge for 7 days. Just make sure you cancel after the 7 days if you do not want to continue with the membership. It will charge you otherwise. But I like to think that there's a lot of fantastic things here up for grabs for people to kind of get deeper into the crypto space. Joining us down in the Discord server, unlocking all the hidden rooms that are membership only, and basically just diving into the world of crypto and learning as much as you can about how the markets are working, how to find good solid projects, how to avoid risks in certain areas, third-party risk, for example. The world opens up when you join us at membership.𝗕𝗘𝗪𝗏𝗀𝗀𝗧𝗏. So why not go ahead and check it out completely risk-free for 7 days. Let's jump back down into the charts here and take a look, right? So as we can kind of see, my expectations are that we will eventually move down deeper. I do not expect it to be a straight line drop though. I am still targeting out 15 15 to 18 cent. We haven't changed that. We haven't broken higher than our existing high on our B wave at the moment. So we are still looking for a move to the downside between the 1 and the 1.236. That hasn't changed. Essentially, we're tracking these little micro movements on the hourly chart versus this of the daily chart. All right, that zigzag pattern that we have a C wave low at 28 cent. Yeah, it's fantastic. We'll bounce up from there, but again, it's all a part of a bigger move, right? We could probably see a double zigzag or even a potential triple zigzag. So for reference on that, you'd have an ABC as your zigzag, a WXY could be your double zigzag, and a WXYXZ could be a triple zigzag. Now you could have a double zigzag and a double zigzag that could get you down to the 15 to 18 cents. So there's lots of different ways that things could happen here. I'm not expecting it to be an impulsive structure, but it's also possible that we do maybe have a double zigzag, then we bounce up in a 3-wave pattern, and then we drop down in a 5, right? Making it a 335 flat correction at the end as well. There's lots of different options here on how we get down there, lots of different reasons and rationale behind it. Just bear in mind that I am expecting a new bear market low. The last one was the 10th of June, and I suspect that a new one isn't that far around the corner either. Now, we do have some momentum supporting moves to the upside, so it's not all bearish, guys. I do think that there is going to be a move to the upside in the coming days, where we can see the daily 8-hour and 4-hour are all in the oversold positions, meaning that momentum is likely to shift and we're likely to see a bounce upwards at some point. I do think that the 200 EMA, though, that's currently sat at the high of 35.29 is likely to be our resistance. I don't think we're going to rally past that, but I could be wrong. We'll keep a close eye and see how things go. But for the most part, my expectations are that on a macro scale, we are heading down into a new bear market low, where I estimate it's going to be between 15 and 18 cent. Let me know what your thoughts are down in the comments below, but I think I'm going to leave this video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't joined us in Discord, what you're waiting for, check it out, linked in the description below, along with membership.𝗕𝗘𝗪𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.